Saswat Guha is Senior Director of Banks at Fitch Ratings. He's joining us right now. Saswat, good morning. Good to have you with us here. Thanks very much. Now, exactly that question has two questions, actually. One, according to you, and you track this stuff closely, has the pace of RBI action with regards to ensuring compliance picked up considerably? And second, what has changed? If the answer to the first one is yes, why so?
Hi, firstly, good morning, and thank you for having me. RBI has been pretty active, hasn't it? Before I sort of get to that question, I'd just like to sort of put it out here that we do not cover JM Financial from a credit perspective, but we do take a keen interest in the regulatory framework whenever we are assessing, financial institutions. And what we have generally seen is that a strong and effective regulatory framework is actually a long-term positive for the financial sector and for the financial entities. One, from a investor confidence point of view, of course, and the second is in terms of their ability to generate business and profits in a sustainable and risk-controlled manner. So in that context, I think, to your first question, yes, we have indeed seen RBI getting a little more active in a sort of a public way, but that is not necessarily in just what we have seen in 2024. In fact, if we sort of jog our memory a little back, and that's not too far back, I mean, we have seen RBI, enforce, actions on HDFC Bank. Then we have seen it do so for Bank of Baroda. Of course, in recent times, we have seen, other than JM Financial, we've also seen Paytm and IIFL. And I think what this sort of indicates to us is clearly a regulator that sort of means business and is not sort of shy of calling out issues wherever they see supervisory concerns. But Saswata, more importantly, I think,
go ahead. Please complete your point,
No, I'm saying, but more importantly, I think what is also important to recognize is that, they are targeting specific business segments. They're not, it's not that they're sort of course, Paytm is an exception, but I think other than Paytm and whatever actions we have seen, I think what they've essentially tried to do is try to contain systemic risks within a certain business segment where they have, from their standpoint, where they have seen supervisory concerns. So,
just to make that, and that's an important point, JM Financial Products, it's a near 100% subsidiary of JM Financial, the company. So it's to that point that you were making, Saswat, this is specific segments which the RBI is essentially looking at. Just one point, you were talking about some of the other financial action against some of the financial entities. Has the type of action changed? There are these fines which were imposed, and there's a long list of them in 2023 and 24. And so the type of action, has it changed, or it's remained consistent?
So as far as fines are concerned, that is pretty much in part parcel of this business. So I think in certain situations, RBI chooses to go with fines, and we have seen not just any specific institution, but typically institutions, depending on where discrepancies arise, RBI does sort of tend to penalize them through fines. But I think the ones that I mentioned, they were specifically, they took specific actions where they barred these institutions from either taking on more customers or issuing credit cards and so on and so forth. And I think it is in those specific segments, perhaps where RBI actually came across some serious issues, and which they have not been shy of sort of putting it out there in public. But I think more importantly, the process of regulatory audits have been there in the system for as long as I can remember. But I think what is sort of changing is that RBI is now more open to come out and take these stricter actions instead of a more internal dialogue, which perhaps may have been the case in the past. And I think that's ultimately good for the system, because it sort of, one, of course, is it sort of adds weight to the old supervisory framework and the strength of the supervisory framework. But also, I think it'll keep the entities on their feet in terms of ensuring that, whatever business they do it within the confines of the regulatory framework.
I think the larger issue also is, why is the RBI worried, right? Are there serious concerns on governance issues in many of these pockets? So we're talking about gold loans, we're talking about loan against shares, IPO financing. Do you see any other segments that could be vulnerable to this kind of action? And if yes, what do you think the impact on the markets could be?
Yeah, so as a financial sector regulator, I think it's important to recognize that one of the objectives of the RBI also is to ensure that systemic risks are contained. And, while I would not like to sort of conjecture on whether RBI thinks of this as a much bigger, larger systemic issue, but at the same time, the fact that it's sort of targeting specific product lines and specific entities sort of goes to show that obviously it is not I don't think it is necessarily being kind to isolated cases, and I saw perhaps also send a strong message, in the process to the other entities, so that they can course correct if at all, there are any discrepancies at their end. But I think what perhaps to me as a credit analyst, sort of this tells us is the high degree of operational risk that typically entails, retail business in India, because if you see, most of these actions in some way or the other essentially cover retail products. So I think for us, clearly banks and NBFCs would probably have to be a lot more vigilant when it comes to operational / process related risks.
All right. Good morning, Mr. Guha. Nigel on this side. I wanted your view on one specific issue, which is with regard to gold loans. Yesterday, IIFL on the con call said that the other NBFCs also, they are dispersing cash of close to around 2 lakh, while the regulated limit is around 20,000. My question to you is, if that is the case, then we could see action on other gold financiers as well?
Well, like I said, hello, Nigel. I mean, RBI does regulatory audits across companies. I don't think it's specific to, I don't think it's necessarily a case where one entity is being subjected to something extra as opposed to the others. So I don't want to sort of necessarily speculate on what IIFL had said, but our sense is that, given and based on the companies that we cover, our sense is that those companies so far have largely been in line with whatever the regulatory norms are. And the reason why perhaps a company like IIFL was sort of singled out is I think those reasons have been laid out, quite, very clearly out there on the RBI website. So, of course, management is within its right to sort of defend its position, but to say that RBI is not sort of taking an easy hand on others vis-a-vis someone else, I don't think that would be the right conclusion.
All right, Saswata, it's a pleasure having you with us, and thanks for that perspective. Very useful, right? Because I think that's the question that many are asking, whether this is a sector-wide issue, industry-wide issue, but this is very specific, directed action. But as you said, RBI is not sort of averse to showing concern in a public manner, maybe internal dialogue earlier, but now, of course, a lot of it is out in the open in that sense. So that's the view coming in from Saswata of Fitch.